Hello and a very warm welcome to moneycontrol.com. The last week in India saw a flurry of activity in the economic space. We had Ms. Nirmala Sitharaman present India's budget, which is a much awaited event in the Indian policy circuit because that's when the government lays out its intent for the next year and defines its policy priorities. Besides that, we also saw one of the largest conglomerates in India and across the world face a lot of heat. So much so that the Adani group lost over $100 billion in market capitalization because of a report put out by a research firm based out of the US. So, what do these implications mean for India? What does the Adani episode do for India's image as an investment destination? What does the budget do for India at the moment, for India's startups, for India's private sector? To understand that in greater detail, we have with us Mr. Rajeev Mantri, founder and CEO of India focused venture capital firm Navam Capital. Hi, Rajeev. Thanks so much for joining us.
Hi Shweta, thank you for inviting me.
Hi. So the last week, it was a very busy week from an economic policy point of view. I want to get your first thoughts in on the budget. How are you, as someone who's constantly investing in startups, in companies in India and the US, how are you viewing this budget? What does it mean for you?
No, I think it's a net. It's a very big positive. It shows the thrust of the government in augmenting capital expenditure and investment in the country, which will, over a period of time, I think, lead to a higher trend rate of growth because we will improve our productive capacities because of the large investments that will come from the public sector. So we're not seeing actually spending that is of a short term nature, but we are seeing important investments being made in areas like railways, roads, airports, and other kinds of hard infrastructure, which are very important for kind of the logistics infrastructure in the country, for linking up the whole country together, for both businesses as well as consumers. And net, I think this will have a very good effect on the trend rate over time.
Okay. So over the years, we've seen an increase in capex, and this is one of the clear big takeaways from this budget. It's consistent focus on infrastructure creation. When do we see the effects of that playing out in the economy? Because there is one counter to that it does not create as much jobs as one would expect for it to create. It hasn't been able to create as many jobs. So I mean, how do we look at that? When is it likely that we start seeing the effects of that to play out in the economy?
No, I think there is obviously large job creation tied to that. We can always, I mean, maybe it's not enough to sort of meet the needs of the country overall, but obviously then any one sector cannot do that, right? So if you look at the overall budget, spending is at about 45 trillion rupees. Capital expenditure of that capital expenditure is about 10 trillion. So and within that 10 trillion, 2.7 trillion is going to be on roads, highways, and surface transport, and 2.4 trillion will be on railways. So over 5 trillion rupees actually is going to be spent on roads and railways, and that obviously entails significant sort of construction work, significant expenditure on. If you look at within the railways where the money is going, it will entail significant spending on kind of the rolling stock, which is the railway vehicles. And so I think we'll probably see many more Vande Bharat trains being rolled out. The Vande Bharat is obviously the indigenously developed train that India has. So overall, we will see significant sort of a good number of jobs coming out of it. Now, whether the job numbers are enough to meet the needs of our burgeoning demography, obviously, like I said, one sector cannot carry that. But other kinds of private investment hopefully will kick off from this year.
Mhm.
Indications are that capacity utilization is already sort of elevated. So we should see private investments kicking off, and then hopefully that will lead to increased job creation in the private sector as well.
Okay, the one thing that the markets are loving about the budget is that the credibility in the numbers. There's a lot of transparency. There's a lot of credibility. What do you think is driving that credibility? What is it about the numbers that's looking so believable? And how was it earlier? I mean, what's the difference from then and now?
So in earlier years, there was a tendency to kind of push items off balance sheet, and kind of massage the numbers, if you will, to portray a sort of better picture than what may have actually been the case. But I think a few years ago, the government decided to sort of clean up the books in a sense, and that actually gives a lot of confidence to investors, to all sort of analysts, that the government isn't really hiding anything, and they are saying things as they are. So I think that's obviously a very big positive, that the government has the confidence to sort of put things out there, and instead of playing the cat and mouse game with analysts who could argue that, wait, this particular line item is not budgeted in the official numbers, but it's kind of off balance sheet. So I think it's a very good measure for transparency, and it gives a lot of confidence to everyone that the Indian government is kind of proactively putting things out there for everyone to see and analyze.
Okay, so even as the Indian government is making all the efforts to make the numbers more transparent, uh, a big group, the Adani group, is in the news on charges of manipulation and charges of fraud made by a research firm based out of the United States, Hindenburg Research. How, according to you, does that impact India's image as an investment destination?
So the specific allegations over there are not my area of competence per se, but I will say that so recently Aswat Damodaran of the New York University put out a very good analysis, I thought, on what he thinks is going on there, and he said that probably some of the allegations made by the short selling firm are overstated, and on the impact it will probably have on the India story, I don't see it sort of having any significant impact, to be very blunt. India is much bigger than any one corporate. India is much bigger than any one particular company, and whatever is happening over there, I'm sure Indian regulators and the Indian authorities will, whoever is responsible for it, will deal with it.
Okay, what is the response you think should come from the Indian regulators to ensure that it does not dent India's image?
So I think so far the stand taken by regulators is the correct one, that they have kind of put the securities under, I think, surveillance mechanism. There were reports that, I don't know, they were unverified media reports that they have sought more information. The central bank has put out a statement after checking the exposures of the banking system to the corporate. So I think that's the way to respond to it. I mean, much of this could also be kind of a panic reaction, right? Like certain information, disinformation actually starts spreading, and then
Mhm.
I think it's important for authorities to step in with the right information and clarify things, which they have done.
Okay, but does it raise concerns over corporate governance? This has come up, in the last few years. We've seen instances where corporate governance has not been up to the mark, and we've seen big companies like Satyam, for instance, also go down. So, does this once again raise that ugly head of poor corporate governance, role of directors on boards? And other mechanisms that have been devised to ensure that there is greater transparency in the way companies are run and valued.
No, I don't think we should draw a comparison with a case like Satyam, which was actually a established case of very serious corporate fraud. At least nothing has come out so far yet in the Adani case to draw that kind of a parallel so far. So I think we should be a little bit careful drawing an analogy like that. But yes, in general, I mean, see, corporate governance, there's always a debate going on in every country about whether the protection of minority investors and conduct of corporate, especially large ones, is good enough, right? So this is no different in the US. This is no different in any other large economy. So I don't think we should uh, beat ourselves up too much on that point. Having said that, I do think that having a diversified shareholder base, having a sort of transparency in accounts and so on is very important. And there are enough Indian corporates who are actually practicing all of this, including at the highest echelons in corporate India. So we have like good actors in every country. There will be bad actors. I think as we embrace sort of a market economy, we should be willing to accept that there will be some episodes of failure and kind of fraud every now and then. Not to say that this particular case is anything like that, but in general, there will be episodes. So we should take that in our stride as we embrace a more and more kind of a liberalized economy and free market system. The payoffs of doing that are uh, substantially better. You have the odd case of fraud and failure, but then you also have manifold benefits to entrepreneurs and to those who are building companies.
Okay, okay. Moving on now to the India story. What's exciting the world about India? Everyone's been talking about why India is the bright spot. So within 2 weeks, we've seen two different narratives play out. We have the World Economic Forum where India was clearly the shining star, and then last week. A big Indian company is in the news for the wrong reasons. So, what, according to you, is working for the India story right now, and what's exciting you about India?
So if you look at the last 30 years, since 1991, since the liberalization, the I think what has really taken the world's imagination is the quality of entrepreneurship from India. We have seen truly world-class brands, to truly world-class kind of companies come out of here, and who have made significant contributions across different industries. And of course, Indian managerial and executive talent, we can see it visibly making a huge contribution across the world in the highest echelons of the corporate world. So I think what people look to India and what they find here, what investors find here, is an extraordinary kind of depth of entrepreneurship, extraordinary kind of caliber of management and creativity in business. And you can see that in the kind of boom that we've had over the last 5 years in the area of startups and technology ventures. So I think a lot of people are seeing India as a destination for high technology and innovation in particular. And that 25-30 year kind of track record that we had in creating world class businesses, creating businesses that provide great returns to investors. So that track record is very attractive to investors, and I think that's what was visible at a gathering like Davos,
Okay.
where, uh, uh, where investors who are looking, across the world and seeing where should I put my capital. You are
Mhm.
finding a growing economy. You are finding, hardy and creative entrepreneurs who are building sort of new industries, who are which are and companies which are increasingly global from day one.
Sure. But what are the challenges, Rajiv, according to you, that we need to work with, we need to overcome to ensure that this sentiment actually drives investments into the country? Because we do know that there has been a lot of FIIs that have been exiting India, that there have been a lot of selling also that's happened in the last, specifically in the last few months. So, how do we ensure that that intent translates into investments?
So, while we have covered many areas of important reform, important structural reform, I think many areas remain, right? There's always more to be done in that sense. And I think important areas like direct tax reforms, implementation of the labor codes, which have already been passed by Parliament, that is still pending, as the Economic Survey pointed out. Even on the ease of doing business side, much more can be done to sort of make it easier for foreign participants to operate in India. There are still a lot of tedious like reporting requirements and uh, kind of paperwork burdens that are imposed. So I think we can keep doing much more to ease all of that. That will probably make India a more attractive place. Ultimately, I know we can't compare ourselves to smaller countries or city states, but we should sort of hold ourselves to a high benchmark and keep trying to improve ease of doing business as well as other important industry level and factor market reforms that are pending.
Okay. All right. What are the sectors that you are betting on and why?
So I'm very optimistic in some of the hardware areas that are emerging now in India. I'm seeing like a very important, very exciting shift actually in the last 4 5 years, where you are finding entrepreneurs are getting into areas where, for example, they may not have considered uh, in 2017 or 18, but today it's on the anvil, and that includes areas in frontier tech, which could be considered some of the most cutting edge in the world, whether that's space technology, whether that's drones, whether that is in areas in some of the most emerging areas of artificial intelligence, biotechnology. I think all of these areas, which include not just atoms, or sorry, not just bits, but also atoms. I think Indian entrepreneurs are now turning to that space as well, and I think that bodes very well for our economy, as well as from a strategic perspective. It will help the country build certain capabilities which are applicable even in a defense or a military sort of sense.
Okay, all right. Okay. Thank you so much, Rajiv. It was great talking to you. Valuable perspective on a lot of sectors that you're betting on, and of course, on India's image as an investment destination. Thank you so much. We hope to have you back on Money Control. Thanks.
Thank you, Shweta. Thank you for inviting me. Bye bye.